Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hi there. Welcome, everybody. I'm Dave Etkin here. I am the director of the Louisville Small Business Development Center. And as always, I'm joined with my coworker and good friend, Janet Flaw. Hey, Janet.
Hi, Dave. It's another great Toolkit Tuesday. Looking forward to this one.
Absolutely. So thanks, everybody, for joining us for another Toolkit Tuesday. And as always, just to make sure that you can hear and see us well, if you look at the bottom of your screen, you'll see a toolbar. And if you just kind of hover over that and click it, you should see it pop up. If you wouldn't mind, just tell me that you can see and hear me and your name and where you're joining from. You know, as I always say, this is my favorite part of the day, other than the great content we provide, is where everybody joins from. So we get folks from all over, so it's really interesting to see. So there's Kelly Patton. Where are you from, Kelly? Cindy from Simpsonville. There's Carla from Lexington. Oh, Prospect. Yeah. I was just there yesterday, Kelly. Yeah. Carrie from Richmond. Great for joining us, Carrie. All right. Who else we got there? Is Deborah. Hey, Debbie in Louisville. Good to see you. Awesome. Thanks for letting me know. Hi, Teresa. Hi, Teresa. I haven't seen you around lately. Thanks for joining us today. Teresa's also from Louisville, so yeah. Say hi if you haven't done so yet. Just click on the chat. You know, as we go through our presentation today and our meeting with our expert, if you have any questions or comments, just put them in the chat. And again, the toolbar is just right there at the bottom. You should be able to click on that and pop the screen up and just say hello. So appreciate all that. So, you know, as always, we kind of drive what we talk about on these Toolkit Tuesdays based on the questions we get from our clients. And we get a lot of retail and restaurant clients. And one of the things they ask is, you know, how do we manage this whole PO, you know, the point of sale system, you know, with taking credit cards and making sure everything's in line. So we thought it'd be great to find an expert on this subject and bring him in and just kind of talk about it. So we are honored to have Scott Tyree. He is with Merchants Impact Consulting Firm. They help folks set their payment systems up and can help navigate everything. So Scott, how are you today?
Doing fine, Dave. Great. Thanks for the intro there.
Yeah, thanks for joining us. I appreciate everything that that you do, and I will go ahead and just get started. Hand it over to you.
Appreciate it.
Put your slides up on the screen here.
Thank you.
And we'll get going. There you go. Can everybody see that? Okay.
Yep. So there's American Small Business Development Kentucky on there.
There you go. So, okay.
Move it to next.
Take it away.
Okay. So my name is Scott Tyree. I work with Merchants Pack here in Louisville, Kentucky. We cover the state of Kentucky, southern Indiana, Tennessee, as well as the United States. We are an independent sales consultant firm here. We've been in business for about 15 years. I've actually myself worked in the credit card payment processing industry for about that long, if not longer. I'm a certified payment professional through the ETA, and obviously my phone number and email address is listed on there as well. If you have any questions after the presentation today, feel free to email me or give me a call. That's my cell phone number. Next slide, Dave, please. So here's some of the, just an overview, some of the challenges local businesses face when they start to look, if you've ever taken credit cards or it's a new business starting up, some of the things to challenges you run into is a lack of transparency with the Visa, MasterCard pricing, interchange, flat rate, 3-tier, bundled pricing, general lack of customer service and support is an ongoing issue in our industry. Obviously, as the larger companies get larger and larger and go through different build-ups and so forth, tends to be more of an 800 number type situation. You find some providers will hold funds more frequently than other ones. And what I mean by that is when you start taking credit card payments, expecting those to show up in your business checking account or checking account next business day. Businesses do not understand their fee structure. They basically get set up by a company either via the internet or through a bank or through a local chamber. And then basically no one really sat there and explained to them how these work. Security is always a big issue in the industry. Obviously, you can see all the things on the internet nowadays. And I think there was one the other day where it was, I think it was Dell laptops where there were some issues with, information get compromised. Once they're set up, businesses do not receive regular communication from their current provider. It's just kind of they're there, they set them up, and then they never hear back from anybody. So there's no follow-up whatsoever. And then customized convenience fees are non-compliant. What you're starting to see a lot, I'm sure, where it's Richmond, Lexington, Louisville, you see a lot of things now where you go to a business, whether it's a restaurant or an actual retail location, and they're charging a fee to that particular customer. Them not really understanding what the compliance is with Visa, MasterCard, and that what the implication for that might be down the road. Next slide, please. So credit card processing, this is just kind of a general overview of who's involved. Cardholder, you have the customer, and then you have the consumer who buys a product or service. You have the merchant, the business owner, store seller, vendor, business that's selling the service or product. Merchant bank, there's an acquiring bank, business has an account and credit card funds are deposited into. Payment processor, acquiring processor, the provider that processes credit card and debit card payments. Independent sales organizations, bank outsources this to a third party. Issuing bank, credit card issuer, cardholder bank, bank which issues a credit to cardholder. Card associations, credit card networks, association member, major card networks, and then Visa, MasterCard, Discover, and American Express set the policies for payment processing such as interchange fees. So these all kind of come together when you actually get a merchant account set up as well. Next slide, please, Dave. So what happens? So once you start taking payments, what's called a credit card authorization is the first step. The credit card requests authorization from the issuing bank. The issuing bank validates a card holder is approved. That sends approval or denial to the card association and bank. The issuing bank places hold on purchase on card holder, and then merchant shares approval denial with card holder. So it kind of shows in the diagram below. All these are the different steps that obviously happens instantaneously when you're taking a card payment, whether you're a retail brick and mortar location or restaurant. And then obviously once it's approved, the receipt prints out on your desktop or your POS integrated system. Next slide, please. Credit card authentication and settlement is the next step, the second part after the authorization. So this is a step once you actually get your funds, going through each day's daily sales, whether you're running a split shift or a full day settlement. So basically you have your authorizations are built up throughout the day. This is the second part. The settlement means a merchant business sends batch of authorizations typically once a day. And the processor reconciles those authorizations and submits batch over card association networks. The processor deposits a fund from credit debit card sales into a business bank account and then deducts the processing fees. At this point, the business role is complete. And you can see in the diagram below what happens with the merchant, the payment processor, the card association, and then the issuing bank. And this all basically what goes on from the next step, authorization, settlement, and then this is where the next step it goes into your bank account. Next step, please. Did I freeze? Okay.
Dave,
Yeah,
Can you hear me?
yeah. Yeah,
next
okay.
slide.
Next slide, please.
There we go.
Okay. So, obviously we did a general overview of kind of how the card authorization works within networks and settlements. So how do you pick a good credit card, debit card processor, Visa, MasterCard? Obviously, most people want a quick and easy setup. They're looking for live 24/7 customer service, advanced fraud protection, and obviously you want to be able to take all payment types, including Visa, MasterCard, Discover, American Express. If you're a back office solution, the automated recurring payments, where you can set up a one-time card payment and set up for successive monthly, quarterly, or annual charges. An account updater to keep your card information up to date. So basically, if you do take a card, basically it stores that card securely, so you don't have to keep asking for that card number every time. Another popular proposal is digital invoicing, where you can send an actual invoice to a customer by email or text, and then you have a simple checkout with a buy now or donate button on your website. So all these are different various forms that you can set up to basically take payments as you need. Next slide, please. Credit debit card processor considerations. You have what are called a first-time user or someone that's switching companies, obviously been with the current company or either unsatisfied, rates keep going up, lack of customer support, have not seen their salesperson in several years, look for low rates and fees for processors, obviously the first consideration everybody obviously looks at. Is your credit card equipment is a second choice, unless there's specialty equipment, which we'll cover later. One thing I tend to find out that if the free equipment scenario, it's obviously looks great up front, but a lot of times there's a contract on the back end and higher fees that aren't always disclosed. Avoid leasing credit card equipment due to 4 or 5 year terms. This is an ongoing issue in our industry where a customer wants to switch, but they've signed a lease, whether they knew it or not, and they're locked into a 4 or 5 year term and can't get out of it until the lease buyout type scenario. Looking for security for their card holders with point-to-point encryption, P2P, and then tokenization is another aspect for fraud protection. Chargeback or reversal department for contested charges by customer. This is a step that most people don't fully understand if this is the first time ever taking credit cards. Basically, they get set up, money goes in their account. 6 months later, they take a card charge of some sort that's out of the norm. It's a higher amount, it's keyed. Basically, then, of course, the money quits going into their account. And what actually happens is, not only does that first transaction that was penned by the risk department get held, but everything behind it until it gets resolved. PCI compliance is something that's been around, assistance to avoid penalties. So a lot of people don't fully understand what that is. That's kind of mandated by the Visa MasterCard network. You have to do that annually, quarterly, as well as monthly sometimes. Obviously, that there's no application annual fees or contractual fees involved. Making sure that you're doing compliant surcharging where you're charging the credit card and not the debit card. And that actually was changed this year down to 3%. And I've seen a couple of scenarios where they have kind of a homemade surcharging program. And then there's also the cash discounting program where it's kind of a workaround around surcharging. It hasn't been fully enforced yet, but Visa, MasterCard, I think in the next year or so, we'll start looking at those as well, where you're passing the fees to the customer. Are they an independent processor with an unbiased approach? In other words, are they tied to a specific bank? Are they tied to a specific type of product where you're not getting the full picture of what's involved in the benefits and solutions for your business? Obviously, 24/7 customer base in US is a big issue nowadays, where they can speak English. You get 24/7 customer service, where after hours, those type of things, we need to get a hold of someone, they're going to be there. And then if it's important for you, local installation. So do you have someone that locally that can walk you through training on the equipment, setup, any follow-up questions, those type of things. Next slide, please. So I try to outlay some different processes that are out there and how their approach is different. I'm sure everybody's well aware of Square. They're what we call a PayFact. They basically handle primarily mobile brick and mortar restaurants. They traditionally do flat rate pricing only. Traditionally, they're only daily billing, where they're taking the fees out daily. Traditionally, not monthly fees. Traditionally, there's no live customer service support. You're going to be either emailing or sending a contact to Square. No contract. Traditionally, their deposits are next day. If there are funds held, which I've run into some issues with Square customers in the past, it's hard for them to get an answer of what's going on. So there's no live support to actually answer those questions until they get it resolved. They do sell their own credit card equipment and point of sale system, security with PCI compliance, and then high risk for CBD and hemp stores is one they do handle on a case-by-case basis. Some of the bigger processors out there are WorldPay, one called TSYS, and Fiserv. They traditionally handle mobile brick and mortar as well as online stores. They have different pricing structures, one being flat rates, 3-tier, which is the older pricing structure, and then interchange, which tends to be the most competitive based on your selling volume and average ticket size. They do offer daily and monthly billing. Monthly billing sometimes being more beneficial if you're trying to reconcile your books. They do have monthly service fees, which are negotiable. They do traditionally offer live customer service support based on the different organizations you get set up with. No contract if negotiated that way. Traditionally, most companies nowadays do offer deposits next day. Unless there's an issue, they do credit reports as well as the type of business and dollar amounts and what your normal business hours are. If there are funds held, traditionally you will be able to get a hold of someone to find out what documentation you will need to provide for them. And they do sell their own credit card equipment and POS. And then another one out there, which has traditionally been for online stores, is Stripe. You'll see them get set up a lot of different type of online stores automatically. They're a pretty big player in that market. They traditionally offer only flat rate pricing, only daily billing, no monthly service fee, no live customer service support, no contract. Traditionally, deposits will be 2 days. Funds held, you run into a situation where there's no one there to answer your questions. They do sell their own credit card equipment. There is security with PCI compliance, and they do high risk CBD and hemp on a case-by-case basis is what you're looking at. All right, next slide, please, Dave. So here are some Visa, MasterCard, Discover, American Express pricing models examples. What some people like about flat rate. Traditionally, these will be your lower volume merchants. About lower volume, traditionally someone that's running, I would say anything under $100,000 or less a year, or traditionally will be a lower ticket. They're easy to understand. It's what most merchants will tell you. It's a good fit for what a micro merchant is, which what I explained is traditionally someone, a startup, yard sales, someone that doesn't need the customer service support at this point in time. There is a high rate for debit cards, which a lot of people don't understand, that basically you're paying that flat rate on debit and credit cards. So if you take a lot of debit cards, traditionally another pricing program may be beneficial. No transparency, obviously, because everything's coming in at that one rate, plus a transaction fee. Just like it says, it's not a good fit for high average ticket. And there is an option for surcharging and cash discounting. The next one, which is a better fit traditionally for merchants that have a higher processing volume, is Interchange Plus. If it's set up correctly, it should be transparent, where you pay for traditionally Visa, MasterCard interchange, which is a variable rate. It does change about every 2 years. It is a good fit for regular processing. It's a benefit. You do get the benefit of the lower debit card rate, which I think is like 1% traditionally on a card present. There's a variable cost for interchange and card networking fees, wholesale cost or transaction as well. And this is traditionally not applicable for surcharging and cash discounting if you're going to go that route. Next slide, please. So traditionally, what you're going to find for reporting, which is kind of important if you're trying to track things, or this is just a general overview of a dashboard example, real-time reporting, where you can basically see what you're selling, what the sale amount was, what your batch amount was, if there's any situations where funds are being held. But we call this is what's called kind of a virtual terminal. This is traditionally what you're going to see in a back office scenario. A lot of integrated point of sale systems offer this along with it. So if you're working home or working remotely, you can obviously pull the data from there. You don't have to be at the actual restaurant or retail location. And then at the same time, if you're, let's say, doing some catering and you want to take an order on your computer or your smartphone or tablet, you have the ability to do that as well. And then there's also a support button there. If you need to reach out to some support, you can send them an email and create your own ticket if you need to do that versus just make an 800 call. Next slide, please. Okay, so what to look for in merchant service providers. So we kind of covered a lot of information here. You want to look for true pass-through pricing. So how do you know it's true pass-through? So you can actually go to Visa, MasterCard interchange rates online and look them up. They will list you. You'll see it's a variable rate. There's about 300 different rates, but you can break it down to some simple retail debit and retail credit to give you a general idea of what you're looking for. With your current processor, obviously the processors make money by marking up the rates. So or locks. So you want to make sure that this processor is not giving a low variable rate to get your business, and then a year down the road or 2 years down the road, will that markup rate be increased? Then there's also, we've ever seen where they've actually created other what we call tier programs, where they actually go into higher tiers. So understanding and making sure you have a copy of your contract is important. Customer service answers these questions for you. Obviously, unfortunately, what I see a lot of times is these things come up after the contract's been signed. They start processing, and then all of a sudden they get their first statement. They don't fully understand, or this big debit comes out, and they were under the impression that what this rate was going to be, and that's not correct. We covered this already. Flat rate programs tend to be a good fit for low volume merchants, or if you're doing some kind of surcharging or cash discounting. I talked a little about avoiding the tiered or bundled pricing. That's where basically everything is going to go into a bundle amount or tiered. And so the processor on their back end, when they're actually starting to figure out your rate structure, they will determine what tier you're in. So you have little control over that, how that all works. And unfortunately, in our industry, there's a lot of unsavory characters that kind of utilize that to make extra money. So you have to be careful of that. Deposit time frame is important for deposits. How quickly do you need your money? Some new businesses, like I said, they're a little cash strapped. So making sure they get their funds next business day is important. Try to avoid any type of contractual situation where you're going to get a cancellation fee. Just like you see with long distance nowadays, most companies waive that if you ask them to. Make sure you get in writing, and that's not just something telling you that. Open to purchasing new chip reader or gateway. Basically, are you going to be needing a new type of chip reader. If you're a new business, obviously you need something like a mobile reader on your phone, or if you need a desktop reader or a gateway to process online payments. So is it universal, select, or proprietary for chip readers? We'll cover that in the next slide. Purchase or rental options. So traditionally, like I said, I would avoid leasing. I know some people like to lease because there is sometimes a situation where they will cover the cost of equipment if a year or two down the road. But I've been through several scenarios myself personally where companies will set these things up and then they will sell off to somebody else. And then guess what? That new company doesn't honor that. So that doesn't give you much, what you would say, options or flexibility. So purchase, even though sometimes upfront cost, see if they'll work with you on that, or rental options is another one. Traditionally, most equipment nowadays will run anywhere for desktop readers, $200. And obviously for the integrated point of sale system will be a little higher than that. And then we already talked about avoid leasing or subscription due to length of terms and penalties in case something happens in your business, something changes, those type of things. Next slide, please. So another department that Visa and MasterCard deals with is underwriting. So this is when you're first getting set up. Traditionally, like I said, Square will do their underwriting on the back end versus the front end. Traditional credit card companies all go through this process. So you will fill out what's called a merchant application. Some people may call it a contract, which we try to stay away from that. But basically what you're going to do, once you fill this out, they will assess a risk profile, whether your business is a good fit for the payment facilitator. So what they look at is your business type, how long you're in business. You're assigned an MCC code to make sure that this aligns with your business, which if it's not correct, has presented some other problems down the road. And then you look at your average ticket size, that would be a question you would need to know. What's your highest ticket amount going to be? For a retail brick and mortar or restaurant, it's traditionally pretty easy to understand because they have a menu. Sometimes catering is another issue, so you need to be aware if you're doing catering that you understand that part. And sometimes they may ask you to set up a separate account to cover those higher ticket amounts. And then you will have to provide your IRS or TIN match for merchant's taxpayer identification number. So basically, they will match up your business with your tax ID number. If you're a sole prop, basically that would be your social security number. And they will do what we call a soft credit check on you. So just be aware that anytime you do a merchant application, that is involved today. Next slide, please, Dave. So back to underwriting risk criteria, you look at your business history, just check to review processing history, including changes in volume and risk rating, your bank account verification. So you're going to have to traditionally have a business checking account, your routing number and account number. This is where your funds would obviously get deposited into. Credit check, merchant's current past financial situation. AML checks with public databases maintained by the Treasury Department sanctions list. So this goes back to security, and this we call it certification of beneficial ownership. When George Bush was in office, this is something they passed to avoid any kind of issues with foreign terrorism and money getting deposited remotely. So they will ask you, just like they do with a loan, your social security number, they'll need your home address. So you traditionally ask you for a driver's license, those type of things to verify you're a U.S. citizen. Then obviously your types of products and services you're selling, your merchant location, your merchant size. Merchant location, no P.O. boxes. You have a physical address so they can match up that location with your new business. I just did one a couple weeks ago in London. There's a new business opening up out there. Did not have signage up yet. Obviously, they hadn't advertised in Facebook or any Yelp or anything. So what we had to do is we had to provide a utility bill, something to verify that address with the business name, and then also had to take pictures of inventory. The merchant transaction volume is very important, and the chargeback volume. So all those things go into the underwriting risk criteria when you're first getting set up through a traditional payment processor. Next slide, please. So there are what they call Visa, MasterCard prohibited lists. So as a traditional processor, these type of businesses are prohibited for a company to set up. Now, I know there's some companies that have workarounds, or they're what's called high-risk processors. These are limited, but it includes some of these, and actually there's probably more than this, but adult activity or sexual services, airlines, bankruptcy, debt relief attorneys, CBD and business name, collection agencies, dating and escort services, e-commerce weight loss products, e-cigarettes and e-liquid, gambling, hemp and cannabis, internet pharmaceuticals, foreclosure assistance programs, money service business, outbound telemarketing, timeshares, unswiped cigarette sales, and unswiped liquor sales. So you can see basically a lot of these are basically certain types of businesses. If they cannot get it set up with a traditional processor, they traditionally will have to go the route of going through a high-risk processor that's out there. And what you deal with those is traditionally higher rates and slower deposit times because you're using other banks outside of the traditional bank channel. Next slide, please. So underwriting requirements for e-commerce. So if you're going to set up an e-commerce or a website to take payments, and this is a brand new website or brand new business, you've never done that before, traditionally what an underwriter will want to see is your current website or your developer website. So it's not up and running. Traditionally, whoever's building your website will have a developer website where they can see what's basically being sold, basically your business contact information. They want a complete description of goods and services, your business address and telephone number, alternate contact number, including email address, a customer service phone number, your delivery standards, your disclosure country of origin, terms and conditions. Is it the same screen as the checkout screen? Your card association logos are displayed. Website security method of payment is data is SSL secured, and your contact information for web hosting service displayed. So all these go back to security and trying to protect, Visa, MasterCard obviously is trying to protect the cardholders here, but obviously in online sales, there's a highest risk of some type of fraud or transactional issues. So as much information as you could put on there will help to get it approved. And like I said, I have had to deal with some business in the past that will actually have this put in. And obviously another one is you don't want your website redirected to another website as well. Next slide, Dave, please. So the next thing we're going to cover is surcharging and convenience fees. So the Visa, MasterCard rules under Dodd-Frank Act for surcharging and convenience fees. So this went into effect actually before 2023, but they've changed the laws and rules again, as Visa, MasterCard did in January 2023. So now the maximum amount is 3% for credit cards. It used to be 4%. So I still hear people charging over 3%. So they are out of compliance. And they are subject to fines. And this is not allowed on debit cards, prepaid or other forms of payment like a gift card. It's only allowed on credit cards. There must be signage disclosed to the customer that, and basically you're going to be charging 3%. And then the customer is assessed a 3% surcharge for a credit card transaction. They must register with the MasterCard network and as well as Visa. And traditionally, it takes about 30 days to get set up and compliant on their network. The technology is using automated compliance surcharging, and the software basically will indicate that, and then automatically detect when a debit card is entered and apply no fees. So that's changed in the last several years. We had to manually do that. And just like I said earlier, the Visa imposes fines for non-compliance with secret shoppers. This happened last year or so. And the first violation has a due date of 7 days to get resolved. And there have been sending out fines. Initial fine is around $5,000. And if it obviously, if it continues, then basically Visa, MasterCard can shut down your system. And like I said, the surcharging has been in in place since 2013. This came about as the retailers sued Visa MasterCard over the interchange fees. And it was a settlement that came down to, but this year they changed it back to 3%, didn't announce anybody, but they said effective January, 3% is all you can charge, and we'll wait to see what happens down the road. Next slide, please. So the workaround that they came up with was the cash discounting, Visa MasterCard Rewards for cash discounting or dual payment option. So you can see here on the right screen here, this is what what you call a dual payment option terminal will look like. There's a card price and a cash price. So what you're doing here is if a customer wants to use their credit card, they can still get the points and they get the rewards, but then that fee is not passed on to you as the merchant. Minimum purchase amounts allowed on credit cards, not debit cards. The POS system that you're using, the software will update pricing of goods for checkout discount. So the gray area here is traditionally what you were supposed to have done to make it compliant cash discounting and do a payment was you were supposed to list two prices on your inventory. One would be your cash price and one would be your card price. But the workaround they came up with is at checkout that basically the system will do this for the customer, as well as you don't have to change all your inventory pricing as well. And the same thing, just like the compliant surcharging, you want to list signage at the checkout just for your customers showing what the cash versus card discount is if they decide they want to pay with cash, and that there's no separate line item on the receipt, otherwise a surcharge, which was the case earlier in 23, 2024. All right, next slide, Dave, please. Okay, so payment card, PCI compliance, payment card industry compliance. So this is adopted by all major card brands now. It's mandated by Visa, MasterCard. Any business accepts, transmits, or stores cardholder data is responsible. The thinking behind this is to reduce credit card fraud, which obviously brought about the chip cards. They want to make sure that anyone that's using an IP or internet network is maintaining a secure network and system. They want to protect their cardholder data by encrypting across public networks. They want to protect their systems against malware and update antivirus software on any type of network that you're operating on. And of course, do regular monitor and test networks to make sure they're up to date, not just when you do this, and that you maintain an information security policy on site. And this is all listed on Visa MasterCard's network. If you go to PCI compliance, I think there's 8 different sections. This is somewhat confusing. This is where having a local or some type of consultant to help you out with that is beneficial to your business. Because a lot of people are confused about this, how it works. Do I need to do this? They do it once a year, or they do it once and they think they're done it, and of course then they get hit with these non-compliance fees, which unfortunately some processors in the past have taken advantage of. Like I said, there's some traditional fees, but they want you to do these, and they basically fine you if you don't. Next slide, please. So we'll look at the equipment chip reader or point of sale options. Existing business equipment may play a larger role. So obviously you have equipment on site already. Are you open to purchasing new chip reader or gateway? Is the equipment going to be universal, select, or proprietary? So universal means that they work with any processor. So that means if you make that investment on the equipment and it's getting harder and harder to find this anymore, then basically for some reason down the road, 2 years, 3 years, or you sell the business, that new owner comes in, will they be able to use the same equipment you already purchased, or will they have to go out and buy new equipment? Selective means they work with multiple processors, so that does give some flexibility as well. And basically, like I said, with the chip readers and with the security networks and everything, it's getting harder and harder to find this. And then proprietary is obviously where most point of sale systems or integrated systems go nowadays. They only work with 1 or 2 processors. So traditionally, they'll use Square POS. There's different POS systems you'll see, what was it? Clover's one. Then you have the, I can't think of the other one offhand, but basically what you do is once you put that system in place, they will not work with any other company. So if there's some kind of markup on your rates and fees, which is traditional in that industry, then basically you will have to go out and buy a whole new system. Purchase or rental options again, if you decide you want to make that upfront investment. And again, void leasing or subscription due to long-term penalties. Although some businesses like to lease because, like I said, they just renew the lease every 3 or 4 years. There's no money due up front, but obviously if you do the math, if you figured usually within the first year or two what you pay in your lease payments, you would have owned that equipment by then. And most of this equipment is pretty much obsolete about every 2 to 3 years. So you're going to make some new investment. Obviously in restaurants, equipment, point of sale systems, they tend to be rough run things, people spilling and stuff. So traditionally that's about the life of the equipment as well, unfortunately. Next slide, please. So for a new startup, traditionally what you'll see or a food truck, mobile device, these usually are going to be compatible with your iOS or Android device. They'll support the contactless payments, which is a growing part of our industry with the digital wallets, Apple Pay, Google Pay, Samsung Pay. They support the EMVs, which is important. That's what Visa, MasterCard wants you to be able to do. And obviously can still take magnetic strip payments if they're paying with a prepaid card or the chip card is not working. You can key into the transactions if needed, if it's over the phone or if you're having issues with signal or connections. Bluetooth connectivity is something they added the last couple of years, which has helped out quite a bit. I know back in the day, you had to get a toggle to match up with your smartphone or your iPad or your device, and basically had one of these OtterBox cases and you couldn't get it to connect. So that's been a big plus last year or two. And then of course, do they offer surcharging cash discounting, which believe it or not, a lot of business service related businesses starting to pass that cost along, as well as their costs tend to increase. And so they show here, one is a Swipe Simple Universal Reader, which will work with multiple backends. And then you have a proprietary here by Clover that only works with the Clover backend. Next slide, please. So what you'll traditionally find these for traditional brick and mortar is we call standalone terminal options. These are for payment security, EMV, with point-to-point encryption is traditionally standard. There are still some older models out there that are still being supported that will probably should have been end of life this year, but will probably be end of life next year. That meets the PCI scope reduction that Visa, MasterCard's looking for. Just like our computer, we're starting to see that they need more memory, and Visa, MasterCard with these chip cards coming out with all these different factors. So the older system, unfortunately, do not support it anymore, and they will no longer do downloads to them. People are wanting to look at surcharging cash discounting option on their desktop readers. Do they support EBT? Flex and HSA card acceptance is another big one. Apple Pay and Google Pay. Next day funding with daily or monthly discount with the flexibility. IP connectivity, static or dynamic, which DHCP stands for primary. Static tends to be considered more secure. We have its own network line, or dynamic, which will pick up any open port that's available at your business. And of course, a lot of people are going to the Wi-Fi signal or dial-up option, eliminating some of the cords, as well as issues where routers are located. And there are some of these devices will basically work off its own base with a limited battery backup supply. The devices we kind of outlaid here are some popular ones that have been around for a while. Ingenico Desk 3500, which is considered universal, will work with multiple backends. The FD150, this is a FIS product. It's proprietary. It only works with FIS. It's a good workhorse. Its biggest benefit probably is the larger paper size. And then you have the Androids, like this Velour, that basically work as just like your phone Android or iOS device. Basically has ability to take card payments, at your desk or basically at the checkout counter, those type of things. So they're just getting like your phones are nowadays. They're getting away from the old standard like you see with the Ingenico or FD150, just taking payments, but people want to do other things with them as well. Next slide, please. So the other part of this is payment examples with card acceptance for cards not present or mobile. Are they flexible? Are they convenient from any smart device? So basically, in other words, you're not tied to your business. You can basically take payments. You're on vacation, you're on the road, you're out in the field. You have one of these smart devices now, and obviously you want to be able to take payments. You utilize it for your personal use, but now it can be a business tool as well. There's web-based systems for if you use a laptop for your computer. We just talked about mobile contactless payments, Apple Pay, Google Pay, and Samsung Pay. Will they take those? Faster payment being, will they process transactions faster, which traditionally will, dependent on your signal strength, as well as, if you're a hole or not. We'll go back to compliance surcharge and convenience fee, which is another growing part of our industry, which seems very popular as more people do it. And then does it follow all the latest security guidelines for Visa, MasterCard with EMV and point-to-point encryption, and meet the PCI scope reduction as well. Next slide, please. So can you run the business from anywhere? Do you want to be able to accept credit, debit card payments from any computer, tablet, or smartphone? I would say yes. Can you request payment by email, allow you to pay by your credit or debit card online? Another benefit, flexibility in payments is what customers are looking for. Can you store your regular transaction card information securely for fast transactions instead of have to continually ask for the card over the phone? Once you take it, it is basically stored at the cloud. It's secured. There's no liability for you as a merchant. And does it protect against fraud with AVS and CVV codes, which they all kind of mandate as well, just to make sure that the person over the phone is actually the person that's giving the card information. Next slide, please. So we call it send invoices get paid faster. What you're seeing with a lot of these apps nowadays is basically that customers want to be able to send invoices, which is a big plus and was not available back in the day. You have to take a phone call over the phone or call your customer. So now you can just send them an invoice via email or text. They open it up. It sends them payment reminders. They just basically key in their card information, put their security code, the dollar amount you set, and then basically send it back to you. So there's faster turnaround time on your money. It avoids postage. It does, like I said, send payment reminders to them as well if they've forgotten to pay it, and obviously gets your money back to your accounts receivable in a better shape. And tracks payments in real time for better control over cash is another one. Next slide, please. Online payments, we see this with a lot of, basically, I do a lot of nonprofits, churches, they tend to be going this route. Obviously, restaurants, even retail stores, we all dealt with this with COVID. Had a lot of business over my years. Obviously, we want to set up a website. We don't have the time that we got around to. Unfortunately, COVID kind of mandated that unless you're a major retailer. So obviously, that just quadrupled the amount of online payments. But you had the ability to basically on your website, basically they can put you in touch with some build your website. There's a lot of places out there, BigCommerce. I think GoDaddy does it now. And then you can basically have a buy now button, which would basically will connect to your website. You don't need a programmer anymore to build this for you. So you get paid anywhere. You paste a link on there. You can actually post links to your Instagram account, Facebook, or Twitter, utilizing social media to grow your business as well. It helps manage online business with a payment activity. Does it integrate with your point of sale system? This is another thing. I know Square was running issues in the past where the basic inventory, they were getting sales online. It was not syncing with their inventory. So customers did not know how to reorder things because a lot of their online sales did not match up with their brick and mortar sales. Does it take ACH and card payments? And then obviously in certain situations, do you want to be able to offer surcharging to reduce or eliminate fees as well? Next slide, please. So when you look at a point of sale, and a lot of these obviously that are coming out, Toast, Clover, Square, these are basically, is it customizable? So I know they're specifically designed for a specific vertical market nowadays, and I know that's where they get a lot of the references. But a lot of other businesses basically don't really need all those functionalities. It doesn't really work for them. So A customizable point of sale can be important. List of features that you would need regularly. Just ask your representative, is it going to be mobile, terminal, tablet, iOS? Do you need a wireless signal? Will it work off Wi-Fi, 4G, 5G, hotspots, ACH, credit, debit, gift card, QR code to basically match up, EMV, NFC, contactless, mobile and card not present, payment acceptance, all the things you should look for. One thing I always ask them when they're looking for a point of sale, because they come in different sizes, 8-inch screen, 14-inch screen, customer facing screens, how many SKUs, where you support for inventory. So if it's a larger retail or a franchise operation, it has more inventory. Certain size systems may not be a good fit, where if SKUs are not that important, and obviously it will grow your company as well. Back to surcharging and cash discounting, cash discounting app, which a lot of businesses want to utilize as revenue generators. Will it integrate with your current accounting software? So QuickBooks, I know it's one that they use a lot out there. Is an app out there to integrate with that to make your life simpler on the back end. Does it update inventory from your website again, which is a big one because obviously online sales keep growing. Will you buy your POS system, or will you lease it, or is it free? Going back to what we talked about earlier, some things to kind of avoid. Free POS, obviously, we all know from life, there's nothing that's really free. It always gets covered somehow down the road. Are the POS systems proprietary? Do their software, which we're finding more and more, unless they're a web-based system, it's usually proprietary or cloud-based. There are some systems out there that will allow other processors to tie into them through a gateway, but because a lot of these POS systems are signing agreements with back-end processors and they get a cut, they try to cut out the competition, which can be good or bad for you as a business owner. Whether POS purchase online or reprogram verify will work with your preferred processor. And like I said, those are questions you kind of want to ask up front. Obviously, you made that investment in time. A lot of people traditionally will not want to go through this whole process unless they get something that doesn't work, or they don't. Obviously, the support is usually where it falls through for a lot of people as well. Next slide, please. Here's one system that we've used in a lot of restaurants, and it does work as a kind of fit in some type of retail environments. Clover, simplify your restaurant retail business. Obviously, accept payments easily. It's get clear inventory. You can sell in store, and it does match up with your online store. You can pay at the table now, where basically, you don't have to take the card away from the customer. There is a gift card and rewards program if you decide to go that route. We talked about online integration. Omni-channel being it has multiple payment channels online. Obviously, you can utilize they call it Clover Flex on this, which is the far right-hand side, or you can utilize it with a Clover Go reader as well. And then it also, which is kind of nice, going back to these Android-based systems or cloud-based systems, it's not just basically taking payments anymore, which most of your desktop readers, that's all they do, is they have 500 plus apps on these nowadays. We can basically engage, obviously, online, social media, Google, business, Yelp, inventory, employees, payroll, benefits, all these things can be loaded onto your system. There's usually a monthly subscription cost. Traditionally, they'll give you a month free, but there is a monthly subscription cost to utilize these apps. But it goes back to saving you time and money. And obviously, instead of having to go out and find a payroll company based on what you need and your benefits, they can all do this for you at one checkout system as well, making your life easier as well. Next slide, please. Does POS utilize, we've talked about omni-channel experience again. So you have the physical stores, the mobile app, third-party integrations. We talked about just the previous slide, customer support, social media, and your e-commerce store. So those are kind of what we call the omni-channel experience. Does it utilize the multiple marketing channels? Obviously, these POS sales systems not just about taking credit card payments, but marketing your brand. sending out emails or reminders to your customers so they can deliver a consistent brand message to your social media account, Twitter, Instagram, and Facebook. Trying to get better customer retention by getting information out to them, whether it's a rewards program or retention. Utilizing mobile devices to make life easier because we all carry them with us nowadays. So that's, I know I'm as guilty as anybody. How much time I spend on my mobile device versus how much time I spend in front of my PC has changed dramatically. Website may obviously make it easier for them to do business with you as well. And then in-store with your point of sale system. So basically for checkout and then credit card authorization, that type of thing. Next slide, please. So one thing that Clover is offering now is what they call Bento Box or Bento Care. It's a digital marketing platform for restaurants. It is an additional option for you if you want to go this route. It offers, if you do not have a website, they do offer a world-class website design. It does offer direct online ordering, pre-ordering, and catering on it. It does have built-in marketing tools like automated emails, offers obviously point of sale payments through your Clover system, additional revenue streams like gift cards, and then reservations with your point of sale integrations as well. So obviously what these are all trying to do is they market this as basically trying to fill your seats in the restaurants. For someone that's having a hard time, is not utilizing social media nowadays, it's trying to find ways to get customers into their business. Utilizing Bento Box is another option you can look at as well to bring in more customers and drive more revenue to your business. Next slide, please. Of course, then we go back to social media marketing your business. You have with the Bento Box, you have website design, point of sale system through Clover. They give you local listings, social media. There's Google ads. There's an online store for you as well. And then they provide business tools with text marketing to your new and existing customers as well. Next slide, please. I think that's it. So, Dave, I appreciate your help today, as well as Janet. And of course, my name's Scott Tyree, Merchants Pact. See my information there. I don't know if we have any questions or not.
So yeah, Scott, that was great. That was a lot of information in a short time. I'm going to leave your slide up there so that people can jot down that your contact info very quickly here. And let's pick in here. So I don't see any specific questions at the moment. If anybody wants to put a question in there, please do so. We've got a couple minutes left, but I do want to ask you a question about the invoicing from your phone. How hard is that to set up?
Pretty simple. Obviously, it's a merchant account you set up, but basically, depending on the product that you use, basically all you're going to do is basically you'll just have an app on your phone, and then basically what it is basically you go to it, and of course you can do it on your laptop as well, and you'll basically set up to where you'll basically put the email address or cell phone number of that person, and you can text it to them or email it to them. They open it up on their device or at their laptop, and then they basically put their credit card information and make a payment that way and process it. It's pretty instantaneous. So,
so the so if you don't have any equipment or anything like that, I've heard some people that have tried to do that, and then they get locked into some like a contract, and then if they don't even use this, they only process anything, there's a monthly fee.
Correct. Yeah, you have web hosting fees anytime you use software and so forth. Now there is a workaround depending on if it's a seasonal business. Obviously, you can set up. I've set up a couple. They only operate in the summertime or fundraiser 3 or 4 times a year. I'll set them up to where the fees only get charged those months they're using it. Obviously, it gets turned off. But traditionally, yes, you're correct. There's when you're using these software companies develop these systems to make it easier. There's traditionally going to be some kind of monthly software fee. It can range anywhere from $5 a month up to $15 is traditional. We tend to there are some what they call monthly activity fees. Traditionally, those should be turned off, unless you don't ask that question, but they'll have like a monthly minimum activity fee of some sort, but that can be an issue as well. That's why not, making sure you read your application or contract, thoroughly understand what's on there.
Right.
And that should be disclosing your dues and assessments and all that.
Yeah, good advice. Steve says, can you explain the cash versus credit option that you mentioned earlier?
Yeah, so basically that's cash discounting again. So if you're basically a business and you're taking car payments now, so when a customer walks up to your checkout station, for example, it's not surcharging anymore. They call it cash discounting. So what you're doing is when your customer walks up there, you're giving a discount to pay with cash. So they walk up and pay with cash. The machine or device will actually ring it up without the basic percentage added to it. If they pay with any card, whether it's a debit or credit card, then the point of sale system will add the percentage up to it, which is still at 4% right now. But the main thing here is that it's not adding anything over or that you're making a profit off of it, right? The idea is that you're covering your cost for acceptance and meeting those guidelines, which, like I said, on cash discounting or cash card is 4%. So the tricky thing here was in the past with me was I had to make sure that their current pricing did not have a profit margin built into their cash discounting problem. So that's why a lot of them got put on flat rate. So if you're going to charge 4% to your customers, you should be somewhere around 3.85% is what you're paying. But you're not going to see that fee, because what happens really is it takes the fee out up front, and that $100 that gets paid by that debit or credit card goes into your bank account the next day. So you never see the fee. There are some monthly fees that go along with that. You will see those. It's not completely free, but that's the main thing. But obviously it makes a huge difference. I'd say 80% of what you paid in fees will be eliminated this way monthly. I mean, depending on your volume, it's a tremendous amount. You just have to be kind of careful to make sure you're in compliance. And if the rules change, because they change this year and it can change again next year, depending on whatever, the current political climate is, that type of thing.
Sure.
Yep. Good question, though.
Yeah, thank you. So Cindy says, is it normal for a POS system supplier to get a kickback from the merchant service that is required by the POS system that the merchant ends up paying those fees?
So when you say kickback, you mean that they're traditionally, whether you're a bank or whether it's a point of sale provider, she's asking if they're getting something back from the sure. That's traditionally not always, but it can be a case by case basis. But traditionally, in other words, they're going to utilize, I think I talked about this conversation. So they will, goes back to proprietary selected. They're only going to utilize this particular processor because they have an agreement with them, right? So what more than a kickback, what traditionally will happen is you won't have much choice on your pricing structure, right? They're going to say, this is what you pay, and you have no options. So what I've seen in the last year or so, which is kind of strange, it's like going back in time. Some of these point of sale companies are actually now going back to desktop terminals, utilizing their point of sale system to run their traditional day-to-day sales, and utilizing a desktop terminal, not integrated, but totally separate, to give them more control over the payment. So I think that's where she's probably going with this, because that's usually what they're complaining about. Point of sale company says that this is how we work. This is our system. You pay these fees. We don't negotiate, in other words. And that's kind of unfortunately what happens a lot of times.
Right. I hope that answers your question, Cindy.
Yeah, I don't know about kickbacks, but
It's just the way it works. Everybody gets paid one way or another. That's what you're saying. Like,
and that's why a lot of people go on this cash discount, because just to try to recover some of the costs. I mean,
yeah, absolutely. She says thank you, Scott. So
sure. Anytime. It's confusing.
It is. So, well, and that's why somebody like you is so valuable, Scott, because you've been in this industry a long time and you know what's going on, and you're the guy that can answer the questions.
Well, I appreciate everybody's time.
Yeah,
Anything I can do? Let me know.
after the hour. So Scott, thank you so much. You really know your subject. I mean, I have to give it to that. I mean, this stuff is really confusing to everyone. So thank you for sharing all that.
Yes, sir. My pleasure.
Right. Thanks, Janet, for running the show for us as always. Good to see you today.
Good to see everyone today too.
Thanks, Janet, for your help.
More than welcome. Thanks.
Yeah. And again, I'm Dave Etke. I'm the director here at the Louisville Small Business Development Center. If we can help you in any way, please reach out to us on our website, louisvillesmallbusiness.com. And we'll be looking forward to seeing you next Tuesday for another Toolkit Tuesday. So in the meantime, have a good Tuesday and the rest of your week. Bye-bye.